Good morning. It is Friday, August 29th, 2025. It is morning, just after U.S. market open. Gotta get my Hercules Metals hat out for this weekend. I apologize, I'm not wearing it for this video. But let's get into it because there's some really big stuff happening in markets out there. I mean, look at this December gold futures chart. We are almost at 3,500, right? So 3,500 level was rejected in early August during that, whatever that was, the 24 hours where we thought there would be import tariffs on Swiss gold. It didn't last. Gold dropped, it reset, $150 an ounce correction. Very healthy in a bull market to have that kind of shakeout, especially from such frivolous catalyst like tariffs on Swiss gold imports. That was just a weird thing, and that's very characteristic and emblematic of the Trump 2.0 way of being. But anyway, here we are, and this rise is not based on tariff rumors or tariff headlines. This is real. Um, and I want to break it down a little bit. There's a lot that is driving this, that could be driving this. Obviously, we don't know all the motivations of all the buyers and sellers in the gold market, but this speech from Fed Governor Waller, Miami, not far from me, yesterday. And I invite you to read the whole thing. Obviously, I'm not going to read the whole thing, but there are some really key excerpts from this. And I pointed it out here. He sounded the alarm on the US labor market over and over again in this speech. And he said, this is quite troubling. I believe that any decline in labor supply is only masking weakening demand in the labor market, right? So while the unemployment rate may stay relatively stable, 4.2, 4.3, the labor market is actually weakening because the demand for labor is declining, right? So the unemployment rate is not a perfect indicator here right now, and even that, it's gently, slowly moving higher, right? It's grinding higher. Weakening demand is not good, and it is specifically what monetary policy is intended to address. So he kind of takes the victory lap. I said we should cut 25 in July. He said I was right. Look at the data we got in August. And down here, he says the neutral rate is 125 to 150 basis points lower. So basically, he's saying the Fed should cut Fed funds rate from 4.5 to 3% over the next, 6 months, right? And he kind of says that at the September meeting, it should not just be about cutting 25 basis points in September. At the September meeting, the Fed should signal that more rate cuts are on the way. So this was a very dovish speech from Waller. Clearly, Waller at this point has more credibility than the chairman Powell, and certainly in the eyes of the president. So Waller's on the president's side. He's auditioning for the next Fed chair role, and this speech was just blaring red sirens that the U.S. economy is deteriorating and the Fed has to take action, right? And if we look at housing market, this is a very difficult economy and financial market backdrop to really analyze, because we have like home builders at 52-week highs. We have a lot of real estate sensitive stocks like Zillow breaking out because the market's starting to price in the coming Fed rate cuts. But meanwhile, if you actually look at the hard data and even the soft data like realtor sentiment, broker sentiment, consumer sentiment on real estate, it's all pretty negative. It's all pretty dour. And transactions are pretty slow and borderline stagnant, right? So there is a hope clearly in the market that by dropping interest rates over the next 6 months, there will be a clearing in the U.S. real estate market, in the U.S. housing market. But these things don't happen in 6 months. This is going to take a couple of years to work through. And if we look at like some markets like Las Vegas and Phoenix, I mean, it's ugly, right? Like, I'm not a real estate expert, but I can see the data. I can see the supply of stuff for sale just going parabolic, and it's not moving, right? So when that happens, prices are going to have to drop. So hopefully rates drop, increases affordability for buyers. People who want to sell are more motivated, drop prices, and the market starts to clear, right? That's the hope. That's the bull case of what could evolve over the next year. And then there's all this stuff about how like there's not enough supply in the US housing market. That's BS. There's a lot of vacant homes and vacant apartments out there. So there is. It's just a matter of matching the buyers with the sellers or the renters, with the tenants, right? There's not a shortage overall. There might be shortage in certain locales at different price points, but overall, I would say we have an oversupply, quite frankly, especially with what they're doing, with the immigration, situation, right? But so what's driving gold? I mean, there's a lot that's happened this week. We just got some data out of Canada showing that economy is likely in recession. Canada is in recession as of Q2 2025. Likely has a lot to do with the tariff situation, but there are signs that Canada is not doing well here in August 2025. Whatever has come out of the eurozone, I mean, the UK is a mess. The UK has destroyed its economy. It sent its millionaires abroad because of the tax regime in the UK. I don't think the UK can raise taxes anymore. They've already squeezed that lemon dry. There has to be major policy changes and a come to Jesus moment in terms of welfare spending and the healthcare system in the UK. The UK is broke, quite frankly, and they don't have the reserve currency, so they can't get away with some of the stuff that we get away with in the US. The UK is just one example, but it's a 70 million population country. It's one of the largest economies in Europe. Germany is deteriorating. Their unemployment rate is shooting up. France, I don't know what's going on with France, but it's not good. There's talk about an IMF bailout. I don't think that's imminent, but the fact that's even being floated should send off some alarm bells in your head. So all of this is driving gold. And then what's happening in the US? Well, obviously we have a test of independence of the Fed. That's a big deal. That's a really big deal. Very far-reaching consequences, challenging Fed independence. And I mean, there's a lot going on in Ukraine. And we had the Alaska headlines a couple weeks ago, and everybody's, oh, look at what Trump did. Nothing's happened. Nothing's changed. In fact, one could say the war's gotten worse in the last 2 weeks. But that's big stuff. There's a big chess game being played over there, right? Europe cannot protect Ukraine by itself. I mean, maybe if Germany and France and Poland and Finland just throw the gloves off and get into the ring, yeah, I mean, I guess, they could save Ukraine, but those countries don't want to do that. They don't want to fight a full-scale war with Russia, right? So the piecemeal, we'll send some weapons, we'll send some money. Ukraine is going to lose by war of attrition. It's not enough at this point, right? So there's two choices to save Ukraine from just giving in to Russia and giving away a lot, right? And that's either the US comes and firmly takes the side of Ukraine, which we're not doing so far in 2025, or Europe just takes the gloves off and multiple European countries join in the ring, and that means sending troops on the ground and going full-fledged on this thing. The US choice is the much better choice for the world and for Ukraine and for Europe. The other choice is very undesirable because it gets closer to World War III, right? And I don't think Europe has the stomach. In fact, I know Europe doesn't have the stomach for that, right? So there's a chess game being played here, and Putin still has the upper hand, and he knows it. And he showed it by flying to Alaska, offering nothing, giving nothing, and having Trump kiss his ass. Mind-boggling that a U.S. president would do that. Mind-boggling. He Trump thought he was going to get something. He thought he was going to impress Putin, and he got nothing. They canceled the lunch, and he flew home and acted like it was a big moment in history, and it was a nothing burger, right? So what does this have to do with gold, Robert? Because all of this is showing the reshaping of the world order. Europe is ailing, both economically and militarily and socially. The US is shape shifting. There's a lot of tension at home. There's huge, wide berth of separation between the left and the right. We have federal troops in Washington, D.C. on the streets. There's talk about National Guard Army being used in Chicago, New York. I mean, this is bizarre stuff, right? And all of this favors gold. I need something that I know is truth, that I know stores value over the long term, and other central banks, all these other central banks, namely China, maybe India, right? All these different actors, Poland, Turkey, they're accumulating gold because they want to become less subservient to the West and to the US dollar-based system, right? Because the more they get away from the dollar, the less they have to bow and kiss the hand of the orange-haired or the yellow-haired and orange-skinned king, right? And it just, as I'm speaking, gold keeps going. I'm not talking it up, guys. It's organically happening. And so what's happening in the mining stocks? Like, look at Founders Metals up 9%. Look at the move in BlackRock Silver this week. I mean, these are not small market caps for junior mining stocks, and they're having enormous moves. Look at Banyan Gold. I mean, Banyan Gold was just at 35 cents in mid-August. So we're talking about not even 3 weeks. This is almost a double in 3 weeks in Banyan Gold. And again, this is not a small market cap. We're talking about like going from 140 million market cap to a 250 million market cap ballpark. Okay, don't call me out on that. I'm just doing it off the top of my head. But big moves. I mean, Banyan has not put out news in the last 3 weeks that would typically warrant an extra $100 million of market cap. So what's going on here? Well, obviously there's some speculation of what's going on in the Yukon, the consolidation that may take place in the Mayo mining area of the Yukon, but also I believe this is generalist fund flows into Banyan and just simply a revaluation of gold ounces in the ground. And so there is new money coming into the mining sector, specifically the gold mining sector, and saying, well, we think we're willing to buy this stock up to a certain valuation. So whether it's $40 per ounce in the ground or $30 per ounce in the ground, or maybe even $50 per ounce in the ground, there's a revaluation happening at this gold price, right? All of these stocks have long been valued at $2,000 an ounce gold or $2,100 an ounce gold. Nobody has really said, okay, the $3,000 gold price is here to stay. Let's redo our models with a $3,000 per ounce. Forget about 3,500. Let's just use 3,000. And all of a sudden, these are worth a lot more. Barrick, I highlighted that on my Substack, Goldfinger Capital, a few days ago. I really like this chart. I like the outlook for Barrick, the longer term outlook. I'm talking about 12, 24 months. I'm not talking about tomorrow. And Agnico Eagle, I got it. So I'm going to say one slightly negative thing on the gold sector. This stock is now fully valued at $140 a share. I'm sorry. I mean, incredible company, extremely profitable, huge profit margins, but the growth is just not there, I believe, to support a 20 times forward multiple and a $70 billion market cap, right? I think Yeah, I mean, maybe it can support this, but I don't see it really going higher. I mean, even if gold goes higher, I would prefer to go down the food chain into the mid tiers or the juniors than buy AEM at 140 plus dollars per share. But the money's still flowing in here, right? Because there's just not that many options. The pools of capital out there are enormous, and the gold mining sector is still relatively small. So it's like the elephant going through the doorway sort of effect here in the gold sector here at the end of August 2025. But big things are happening out there in the world, and it is being reflected in the gold price here today. I just wanted to drive that point home. Waller's speech was hugely important, and he has my vote for next Fed chair. He's saying cut 150 basis points in the near future. It's rocket fuel for gold, and obviously it's generally speaking dollar negative. Thanks for tuning in, and have a beautiful, peaceful weekend.